Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of February 9th, 2025. And in this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at the very, very turbulent market and volatile market that has just occurred this past week and touch on a couple of highlights there. Most notably, I want to call out a trade that I had on the Russell future, options on the Russell future, and it was something that was not panning out to be a winner. And then just like that, the trade turned around. I had stuck to the plan, and I just kind of want to lay out what happened, not so much to kind of gloat a little bit about the result, but more so of when you have a plan and you stick to the plan, you know, you got to let it play out. And when you have a plan that's pretty solid and you've worked on it, you know, you'll see the results. And we'll talk about that first. And then we'll talk a little bit about our kind of thoughts and feelings about some of the monetary policy that's out there or that's been kind of circulating, which is generating some of the volatility, not all of it. We have other sources of that volatility. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcast, so look us up, subscribe, and if you can't find it there, let us know, and we will get it there. But let's hop to this week's content. Viper, before I pull up and I talk to my trade that I had on the Russell, wow, what a weekend. So even at the beginning of last week or the week before last week, I should say, it was kind of off to a pretty interesting start where there was some talks around the tariffs against Colombia from the U.S., really around them not accepting deportations or things like that. That kind of got things a little bit fired up, and the market's fallen off a little bit that over the weekend in futures and stuff. Started to rip through the crypto markets, and then that was all overshadowed by DeepSeek. And, you know, we did a previous episode kind of dissecting that just giant market drop on that particular Monday in January. And then how the market kind of battled back from that throughout that week. And then that brought us up to the next weekend where just before the weekend, the U.S. Started talking about putting 25% tariffs on Canada and Canada and Mexico, and then potentially even China. And that just tanked the market a good bit on Friday, where I think we were up maybe plus 0.5%, plus 1%, something. Maybe it was even higher than that. I'm not actually sure that Friday, but the markets were really rip-roaring on really positive news, economic news, and then towards the end of the trading day, this news that the president might decide. This might have been Thursday, but either way, news came out about potential tariffs coming in, and then we kind of came off a cliff on that. Still, I think we finished negative on the day, and then we went into the weekend, and on Saturday, the U.S. announced, yep, that's a thing. We're doing tariffs, 25% across the board. We're also going to throw in 10% tariffs on energy and include China in that fund. And that is where the market's just absolutely just barfed when the futures opened. I think the Russell futures opened down almost 4% from their close on Friday, which was already negative from the trading day. And the NASDAQ was just even more blood red. And as the market opened on Monday, things started. I mean, they were bad at the start. Now, not as bad as when the futures opened Sunday night. And then at some point Monday, they said, "Oh, just kidding. Things are better. They're going to work with us. We're going to give them a month before we do these tariffs." And then the markets largely rebounded throughout the rest of the week. But this was like the absolute definition of volatility, where you just get massive moves in short amount of time. So before I hop into the trade and kind of talk about, you know, my Russell, which was something I've been working on, How did you follow much of this? Did this hit kind of the crypto space as far as volatility goes? I imagine a lot of times crypto hits this risk off trade, which potentially was around.
Yeah. Um, so I'm glad one of us won something out of the weekend. um, because I lost a little bit of my shirt because of how extreme and rapid said volatility was, and it was just a moment of like, I mean, there's a lot of growth in understanding market fluctuations and market behaviors and whatnot that's happening in real time on the show. And so it was a weekend where I was perhaps a little overexposed to the more high risk side of crypto world, and that in moments of volatility and uncertainty, I mean, that's where people pull their money out of first. So but yeah, I was definitely well aware, um, and it was indeed very painful. Although, I guess now that I mean, thinking back on it, like half the weekend was the really painful part. And then as we started going into Sunday, and then going towards futures open Sunday night, and then obviously market open Monday morning. By that point, I had pivoted, salvaged what I could, and got into uh, more of a scalping strategy, because this again would kind of speak to volatility. I mean, it's 100% very different mechanics and trade decisions, but one thing that immediately crossed my mind, instead of just panicking at this is a big loss and look at this number, this is terrible. Like, instead, I was like, all right, understand, risk mitigation, all that kind of stuff. Like, okay, that's got that done. And then immediately jumping on, hold on, like, this is volatility. This is elasticity. And so uh, if I was proud of anything, it was that quick, rapid pivot to settle up, cut losers loose, and all that sort of thing, and then immediately position myself for the elasticity catch, and got right into that, and then was able to get a couple good winning scalp trades of just scalping, mean reversion and the elasticity of such a massive move. So that reminds me, like I said, reminds me of your options volatility hunger. Even though the mechanic itself wildly different, but still, you see the volatility and you immediately know, I'm going to go look here, here, and here, and just execute, 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 that sort of thing. So lemons and lemonade sort of thing. I guess still squeezing, still working on the lemonade, but it's happening.
Yeah, so very nice, Viper. I want to touch on this Russell trade that I had going, and so I'm going to pull up the chart here, which I put my Flappy Bird and my boxes in. And the part that I want to kind of call out when I pull this up here is this trade was really not for any type of anything other than daily theta. And so daily theta basically means when I'm looking for my traditional 25 to 35 days to expiration futures option, selling it, looking for this thing to milk off some premium. And we had just come off of a pretty decent. So these two red boxes that are down here in the bottom, this is my puts that I started with. And so I opened this thing up on January 9th. And we had kind of gotten a little bit of volatility here in the Russell. It was kind of breaking down below this blue area, this line that I had called out. And I said, you know what, let me sell some premium here. And so I went to my traditional like 20 delta strikes, and I sold two puts. I did one at around 21, 25, I think, and one then at 2100, something along those lines. Thinking, okay, we're hitting the bottom of this channel. We might reject off. So let me go ahead and grab some put premium. Well, we crashed down pretty hard shortly after I sold those, which doesn't really concern me. I mean, that's really, when I sell the options, it's fine. That's why I sell them so far out. You get a little bit of sponge absorption. But this was breaking the previous kind of trend that I had saw. And so I thought, this really might be the start of something lower. And so this is the one piece of the trade that I wasn't super proud of, but given where it was, I said, you know what, I'm going to put this on. So I started selling 2 calls at this point. So those are the red boxes at the top. Thinking basically on this day we had this red candle and thought, okay, we're probably heading lower. We might do a little bit of a rebound, thinking we were going to get back up to the bottom of this blue channel, maybe potentially reject off of that and go lower. So I thought, let me get the call in, and burn some theta. So I did. I made those calls actually expire, same as the puts. So I turned them into strangles. Okay, wonderful. Well, that's not actually what happened. We rallied up and then I went into the money. Okay, not too scary. That happens all the time. This was about a 20 delta, so I was pretty comfortable. And this kind of went bouncing along, kind of came back in, thought, oh, I'm going to get lucky. But this is where all the interesting stuff happened here towards the end. So the one call expired on January 31st. That was the Friday after the market rebound of DeepSeek. And we did not quite get, so the one that was expiring was this one that was lower at 22.75. And my plan when I sell options is I am ready for assignment. And that's exactly what happened. I really strongly considered abandoning my trade, going, oh my gosh, we're not coming back down. Maybe I should just close this out, suck up the little bit of a loss that I have of in the money here. It wasn't a big loss, but it would have been a little bit of a loss, and said, let's bail. And I said, nope. Sprocket, you're in this, stick to the plan. So I took assignment. Rolling it wasn't really worth enough premium. I mean, it was okay, but I didn't really want to roll. I said, just take assignment. So I took assignment and didn't think much of it. And then Friday night, after I had read all the news and the tariffs and everything, I said, oh my gosh, I have to check market open because I am short the market. And that will be really good if the market decides to tank off the news of these tariffs. And sure enough, futures opened at 6 o'clock, and I watched the price action. I did not sell at this wonderful, beautiful wick that came down below 2,200, which would have been amazing. That was just to catch that down there that low. I had ended up selling after it kind of wicked back up a little bit. And I really debated, like, oh my gosh, is this really start of something else? I mean, is we're going to get more red on Monday? And I said, you know what? No, the plan when you take assignment is to wait until you can get your cash back and your price below your strike, or basically, and you can recover it. And whatever you can recover, you get out, and your play was on the original premium. Anything more than that is greedy, and you're not going after it. So I closed the position out Sunday night. And then sure enough, overnight, the futures kind of gained and gained and gained. Market open on Monday. Yes, it was red. Yes, things were bad. But from where the futures opened, it was up and up and up. And, we've kind of gone up from there. And these puts, I still have them open. They're still in excellent shape because you can see how far we are. We are now breached and in the money of my other strangle that I have going. But I was able to basically, let me pull up the premium chart here to really show you how this panned out for me when it comes to the trade there. But it really was going to emphasize stick to the plan because your numbers work out. So jumping over here to the chart of where I had this, basically just kind of recaps where I entered on all of them. Now this trade isn't done. Like I said, I still have 1 open call and 2 open puts. Those things are going to go till February 14th. But you can see that first one I opened at 2,100. I collected 1,250. Opened another put the day after that for 835. That's the one that I got all of that. Then a couple days went by. Opened the 2 calls on the same day, a 2,300 and a 2,275. And whoops. I have that marked in the wrong column. It basically was the 2275 is the one that actually expired there for 825. I've got these numbers wrong, but the totals over here are correct. The open price is not correct on the 2 calls, so I'll have to update that. However, All this said is this bonus right here, this February 3rd, this is the bonus. So this is, you went to the spinner and you got your 777. So I got assigned at 22.75. I was able to close out that short at 22.10 because these are futures. These are huge notional values. I basically pocketed 32.50 from that close. Add that to all the premium, and this could, if this pans out as the rest of the trade here, almost a 100% return on capital, which is very, very uncommon for premium selling. And it's really because serendipitously, I got short the market at a great price and then closed it out at an even better price. And so this is the real turbocharge here of 32.50. So Viper, that's just, one of the things, this example, I don't bring it up to be a success story, although it's nice to see success stories. I bring it up to reinforce that methodology and that thinking of you have a plan, stick to the plan. Statistically over time, my plan has worked out. My plan has data to back it up. And it was just a matter of sticking to the plan. But I know you weren't really in the market, as you kind of mentioned. Well, you were, but not in the right way. But what are I think you were bringing up some observations that you had as far as treasury and money flow and interest rates that you were kind of watching, just kind of being intrigued by some of the results and stuff that you were observing there.
Yeah. And real quick, to the whole point of like sticking with the plan and all that sort of thing. The only thing I was going to add was that you kind of saw it in the chart that you showed there, but I guess I'm not going to worry about showing the chart of it or whatnot. But in the Discord, we had been having conversations specifically around Bitcoin and Bitcoin's price action and all this sort of stuff. And we had already confirmed a failure and a downtrend and a couple price targets on where it could go. And so I thought that was interesting because, and I guess it would help. It would make more sense if I had the chart up. But what was interesting was this goes back to the thing that we will say time and time and time again, and is the news and the catalyst and the accelerant, and all of that sort of thing. And I feel like that played out multiple ways here. It played out in this imaginary chart that I'm not showing you, in that this rapid and excessive dump went right and just tagged this level that was called out that we were discussing in Discord, and then bounce back up. But that doesn't mean it's done. Like it could ease its way and keep coming back down there. But just the strength and it hit that level, and is reacting accordingly. So, and I feel like that plays to your follow the plan, stick to the plan, because you had charted that before anything was happening. You had laid out the plan based on all of your different metrics and whatnot, and it just so happens that a news event speed ran the move. That all of a sudden it was like bing bang and done, because it did. It went down like you showed, and then it started creeping back up. So I guess the last thing to beat this dead horse is it's really changed. Like and this is the more you see it play out, the more you get a better understanding of price action and technical analysis and chart reading, the more you really, really, really start to see this playing out. Like, don't ever just take my word for it. Like, learn the stuff and you start to see it, and it gives you this, I don't know, clarity, I guess, because I'm listening to, various shows and news outlets or whatever, and everybody's like, well, the tariffs hit and it looks like it dumped the market and everybody panicked, but then, it started to come back up, so everybody was okay. Like, they attach the emotional part of it to the entire motivation of the move. And I guess what's interesting to that is I hear that, and now I start to think like, okay, I mean, yes, that was the accelerant for the speed of the move, but these moves were kind of already set up, and it was just, are we going to do it slowly, or are we going to do it whipsaw? And that's again to the point of tea leaf reading and all that stuff. Like anybody that wants to put a timeline on anything is just absolutely selling you snake oil. I will say that and stand by that with all experience that I have, even though not a professional. It's the timeline, specifically timeline, not an if this then, but specifically a timeline that is just you just never know the timeline. You know the direction, probability, the most probabilistic direction, most probabilistic target. And we build trades around that knowledge because we're putting probability in our hands, and orders, market orders, all that stuff, limit orders, all that stuff is super important because of this unknown of timing, that something can happen and it just happens. Like if I was trying to trade that, you missed it. It was over the weekend or, whatever. So that is a very long segue to timing. And one other thing that has been on my mind a lot as I continue, I don't know what to call this arc that I'm on right now. So I am, and we'll save this for another future episode. I am getting very regimented because of how things blew up this past weekend. It was a wake up call of like, all right, I really need to find my setup, my structure, my trade setup, and all that kind of stuff, as I've talked about before. So what I've been doing, aside from getting that, and it's scalping at this point, but aside from getting that set up, the other thing that's been very interesting to me is market dynamics. And especially as, a lot of people would say, oh, we're in the bull market already. And a lot of people would say, not yet, and all this kind of stuff. And just those dynamics. I feel like everybody's heard that talked about before. Everybody's seen stuff going up, and, especially in equities, especially in crypto, especially in Bitcoin, which has made several new all-time highs over this period. But there's just this feeling of like, are we? Is it? Are we back? Are we not? Is it going to dump? And all this kind of stuff. And I guess I'm curious if you feel that too, Sprocket. Like, I know you've talked about feeling like we're top heavy and all that kind of stuff, but is it fair to summarize that there's just this weird, this is not what a bull market, like, I don't know. I feel like a big, everybody's super excited bull market. Like when we started doing all of this, it doesn't feel like that. It's this weird feel of like, sometimes it is that, then we're whipsawing the other way. Do you experience that or different?
Yeah. No, I definitely get whiffs of that and feelings of that, which kind of validates, at least in my mind, some of the questioning that I have. And I don't know if it's because, the last recent time, which I think was in 22, where a similar thing kind of panned out, where January started off rip roaring, and then by March we were licking our wounds. I just feel there's a lot of fundamentals. It's a phrase I've heard before, pun on the fundamentals, that's out there, where they're just getting, everything looks like it's going up like a bull market, but if you start looking at numbers, you're like, really? Why? And I feel like there's just not a lot holding it up. So yeah, I 100% get that feeling and that impression that you're talking about, which is what I think is really fueling this volatility, which is great for me. I love volatility.
Yeah. And so that's just to set up the motivation for, where I'm about to head here, because this is, I don't know. I guess this is how my brain works. This is how I'm exploring. And I guess the reason I want to talk about it is I rather than be right or wrong, or I'm onto something, or I'm way off the mark, like I just want to show how much there is to dig into, because we obviously always talk about know the underlying, know the mechanics behind whatever. And this is part of me doing that out loud, as far as like, what is moving a market? What is, and maybe not moving it 100%, but what is contributing to the moves of the market and things like that. So, long story long, then, this chart that we are looking at here, it is not the label in the background. That'll show up here in just a minute. But the red line here is this chart that I had recently been brought to my attention, which you can look up in any charting platform you like. I believe it should be available, but it is ticker WALCL. And it is the Federal Reserve's total asset. And the long story short is if this chart is going down, then monetary policy is tightening, aka quantitative tightening. And so we are in a period of rates, whether rate hikes or holding rates, that sort of thing. If this chart is going up, then we are in a monetary policy of easing. We are printing money. We are doing all of those things where rates are low or, in the quantitative easing part of a cycle. So at a high level, that's what this chart represents. And so if we just drop down here, this blue line here is quantitative tightening ended. And so this is the last time QT ended, which was September of 2019. I think it was actually August, but somewhere in that range, August, September, QT officially ended and we went into easing and money printer mode. And then you see the big jump here, which was the pandemic and all of the excessive unplanned printing that happened there. And then we go up and we round out and then we're in the downtrend here. We are still in a QT cycle here. And some of this was also inspired by the Fed's meeting notes this past last week where Jerome Powell came out and essentially was pretty hawkish. Did they hold or did they cut?
Yeah, they held.
Yeah,
no, they held.
So he comes out, they're holding rates, and all of his comments were basically, this is fine. Everything's fine. And we're just going to keep, holding where we're at, keeping an eye on it, all this kind of stuff. And he really brushed off, from what I saw, I didn't see the whole thing, but from what I saw, he really brushed off this notion of when are we going to pivot? And he kind of reinforced, we're not going to rush the pivot. And so things that I do not know yet about this chart would be what's normal for retracement of this chart. Obviously the pandemic surge here was not normal. And just looking at this chart alone really starts to give an idea of perhaps why that's the plan, why we're holding, why we want to continue this downtrend on the chart here, because we're just now we're just now to the top of this spike here from the pandemic. So again, things I do not know about this chart yet that I'm still learning is do we need to retrace this spike here? Do we need to reclaim that on the balance sheet and all that sort of stuff? So things that I'm still learning. But what's interesting is then, like I said, I've obviously been deep in the crypto market. And so the effects of monetary policy going into the crypto world has been another pretty fascinating thing. And so there's this other chart, which is what you see in the background here. In the background, it's just an equation, total 3 minus USDT divided by BTC. And all of that means that there is this chart here, which we have the candles for. And I'll throw a couple trend lines on here and we'll move the Fed balance sheet slightly out of the way, but we still want to keep it in context. And so the long story short on this chart is this is how the entire crypto market minus Bitcoin and Ethereum performs when measured against Bitcoin. And so really all that means is if this chart is going down, Bitcoin is stronger than the rest of the crypto market. And if this chart is going up, then the rest of the crypto market is outperforming Bitcoin. And traditionally, as this chart goes up, that's when that's when you see the headlines. That's when you see millionaires being made on Dogecoin and all of this stuff, because when this chart is going up, there's just liquidity flowing massively downstream in extreme risk markets. And so that's the main thing that I think is interesting when you have these two charts side by side, is because this chart represents the performance of non-Bitcoin. So Bitcoin itself is already a risk asset. You go beyond Bitcoin and now you're in extreme risk assets. And so as monetary policy is tightening, these extreme risk assets do not perform well at all against Bitcoin. And so based on this, sliding this over a little bit here, we can see mistakes being made, like this past weekend, being too far into that extreme risk category, where if I make this a little bit bigger here, it's all fun and games when we're doing, when we're in this channel here, this kind of expanding wedge. It's all fun and games to be deep in the extreme risk market on one of these swings to the upside, because there is a lot of liquidity that flows even in this small section of the chart here. But this past weekend was this wick down, and I mean, that doesn't look like a ton on this chart here, but it was, I want to say it was around $300 billion being wiped out of this extreme risk portion of the market. And so that's why we put our hard hat on in this area, because that stuff can just evaporate like that. And so despite all of that, we can see that in the trend here of holding up the bottom line here, and the top of this range here, big picture, we're still tightening, and the value of this extreme risk category is continuing to go down, even though we've paused in a way that we've never paused before. We've paused into this weird, I don't know, megaphone pattern, but still making lower lows. I should put like a Charlie Brown director or something outing into this. But that was, I mean, this is me learning in real time that, I didn't have this as part of my context to market behavior before, but this has been part of what's been really, helping me refine my strategy, and I mean, strategy and risk management. Realizing that, hey, maybe this is why it feels like I'm really not getting a lot of wins or whatever, because I'm playing in waters that are constantly being swept out, because the monetary policy, because the greater picture of what moves a market is just not moving in the favor of some of the things that I was doing. And so, that's been part of me recalibrating where I'm at and what I'm doing. It's also probably interesting, just real quick, to flash on here the Bitcoin chart versus, I guess we don't really need it against the total. It kind of gets noisy if we have all of that in there. So just the Bitcoin chart against the monetary policy, I think is interesting, because we saw, again, Bitcoin is a very high risk asset, but its behavior versus how the rest of the crypto market behaves is slightly different. You can see, obviously, as the money printers are on, the Bitcoin price is going up, up, up. And right around where we peaked on monetary policy, we had this lower high here, and then we went down and did a full retracement. But you can clearly see, even though monetary policy is tightening still, the Bitcoin price has made several new all-time highs. And so this is an interesting whole other thing that, at this point, I'll just say it's interesting. I can't tell you why. There's a lot of catalysts for exposure to Bitcoin, which does not equal exposure to the broader crypto market, as that previous chart shows, which I guess is my main point, my main takeaway. So just interesting observations, I think, from me across my journeys. And even if you don't, I mean, it would be maybe borderline weird if you understood a lot of that, because I still don't understand a lot of it. Like I said, learning this out loud, but it's very interesting to me. And that's one of the big points I want to make here, is what we continue to hound on the show of learn the underlying, learn what's behind what you're doing. And in this particular case, if I summarize all of that, it comes down into, like I said, there was a portion of my portfolio that was just struggling to catch ground. I would get wins, but then they would go away and all this stuff. And so seeing this is like, oh, well, these headwinds are straight on and we're not in favorable waters. So let's figure out what's moving the market and see how different strategies work when you position yourself again in that probabilistic position to catch more wins than losses. And so in this particular case, it's maybe don't spend time super deep in the extreme risk end of the crypto market, and finding a balance there. So that's probably a little nugget to what has been working now as part of that reset that I've done. Like I said, I've just been focusing on day trading, scalping, and practicing a very regimented setup, risk management, execution, stop loss, all that kind of stuff, which I'm at the rate it's going, I think it'll be worth bringing up in the future, but we'll see.
Yeah, I can imagine that this is prime scalping environment. The higher the volatility, the faster your moves and the wider your moves, and I think that's really the prime scalping environment. Now, I don't do much scalping, but a lot of times the scalpers like to hit their price target really quickly, because the faster they can hit them, the faster they can cycle to the next trade. And when volatility is around, that's a lot higher. So I can imagine as you try to hone in some of your scalping Viper, this probably is a pretty conducive market to do that in, with so much whipsaw action going on. So that brings us to the end of this week's episode. Like I said, this really emphasizes one of the core tenets of what we kind of talk about here, and that is a combination of know what the heck it is that you're looking at, what makes it tick, what's the, question everything. Why does it do this? Why does it do this? Let me go look at this historically. Let me go look at this historically. Hey, in this particular environment, X and Y happened. So what was the result of Z? And observe it, right? And then start testing some of those observations and those theories out moving forward, and really kind of understand the what makes the machine go brr. What makes it run, because that gives you a lot of contextual knowledge, and lets you think a lot more critically about what you're approaching. And once you have that in hand, start to formulate your trading plans, start to formulate your trading ideas, and stick to your plans. If you're constantly changing all your plans all the time, you're not going to give enough data points to know what works or what doesn't work. It's like when you're trying to experiment on something new in a scientific method, right? If you change 57 and a half variables, you don't know which change was the cause and effect, or the highest probability of the cause and effect, because you changed too much at once. And so, yes, it's kind of annoying. Yes, it's kind of slow. But if you don't take the time to methodically go through that and think critically about different things and what are you doing and what are you tweaking, you really run the risk of not understanding what you're doing. And then you might as well be a blind monkey throwing darts at a newspaper clipping to figure out which stock to buy. Which is a famous, study that you can go back and read about, where they tried to take, famous Wall Street pickers and see if blind monkeys throwing darts could do better or worse. So with the way that markets trade today, so fast, information so freely available, market edges are really, really hard to come by, because nobody really has an edge with as much information that goes out there. And it turns out that people's edge becomes their own critical thinking, in my opinion. So that thing that's between your shoulders sitting up there actually can become the market edge and market differentiator between other traders, because you're really just competing against other traders in the market. And if you can stop and be objective and think more strategically and follow through with things rather than just be reactionary, you stand a better chance, in my opinion, of profiting long term. So anyway, hope you kind of enjoyed, or at least grabbed some nugget of information out of this. Feel free to drop us a comment on what type of content you want to hear about, and we'll focus in on that and drill into that. Otherwise, good luck out there. Enjoy the volatility. I know I sure as heck will. And have a great trading week ahead. And remember, think outside the block.